I'm sorry for the interruption of your usual viewing. And please don't try to change channels.
This is Rush to Reason with John Rush.
There's only one man who would dare give me the raspberry.
Oh, we have something to aspire to then.
And Dan Meurer.
I don't know what it is, but it's phenomenal.
Discussing the issues that matter to you.
Don't give yourselves to brutes. Men who despise you, enslave you, tell you what to do, what to think, or what to feel. Don't give yourselves to these unnatural men.
Finding real answers, using logic and reason.
The greatest trick the devil ever pulled was convincing the world he didn't exist.
I get it. I swear I've seen a lot of stuff in my life, but that was awesome.
Let's do this.
Now, here is your host of Rush to Reason, John Rush.
Alrighty, everybody, welcome to hour number 3 of Denver's Afternoon Rush to Reason, KLZ 560. Dan Meurer in for the out there tanning and vacationing Mr. John Rush. Along with me today is Mr. Jamie Daniel. And Jamie, you are the co-host of what show?
I am the co-host with Rachel Maines on the Corner Cafe radio program. We have an awesome time interviewing all kinds of artists, jazz, pop, and even bluegrass, if we have any, Dan, for you.
A little country here and there?
Now, also,
I was wondering, do you have both kinds of music, country and Western?
You know what? I think they're kind of the same thing, aren't they?
That's a Blues Brothers line.
Okay. You know what? Every time I hear that horn, it reminds me of somebody blowing their nose.
No,
that sounded like that horn when you just did that.
No, that is the skull horn, man. I'm telling you, blowing their nose.
I say that because us Dallas Cowboys, we don't have any horns like that.
Yeah, no, you don't have any horns at all. We know it comes out of Texas.
We don't have anything to toot about it. Absolutely.
We know it comes out of Texas, and you don't see the horns on you. Okay, so. All right. Coming up next is our good friend, Mr. Kurt Rogers with Affordable Interest Mortgage. Kurt, how you doing today, man?
I am doing just fine with you. Isn't it always the case that John goes out of town, goes to Hawaii, and just is laying on the beach when we're on an ice rink or something?
Yeah, every single time. I told you, he's been complaining about no snow. I said, just go on vacation. I said it'll show up.
It comes every time.
Every time.
That's exactly right. Okay, hey, say, Kurt, as you know, as everybody knows, I drive for Uber and Lyft, and sometimes I get into political discussions, and we've been talking about the new tax plan. And so my question for you today is, with the new changes in the tax laws, eliminating some of the mortgage deductions and things, is that going to affect most homeowners, or aren't we going to see any real big changes there?
Well, what I think people need to kind of understand, with the new tax laws, they moved the standard deduction from $12,500 to a family to a joint at $24,000. What that means is that your interest on your mortgage and your charitable donations cannot exceed $24,000. If they do, then you can count them. If they don't, the interest you're paying or the charitable deduction, you don't get to write off anymore.
Okay, so the standard deduction, correct me if I'm wrong, because I'm really not sure on this. Did the standard deduction used to be $12,000?
$12,500.
Okay, $12,500. So let me ask you this then. What is the norm? Let's say you have the average house here in Denver, roughly $350,000, let's just say, something like that. What would your average mortgage deduction have been under the old law?
$95,000 to $12,000.
So
depending on the rate you pay, depending on what kind of loan you had, yeah.
So $9,500 to $12,000. So
but remember,
really,
the $12,500 includes charitable donations. You used to be able to write those off.
Okay.
So they about kind of combine them all together. So they've done a survey on that, and about 88% of the people are not paying with charitable donations and their mortgage interest $24,000. So it actually benefits many of the clients. But what we're trying to show to people is now that you're not getting a tax break on your interest because they're going to give you $24,000, you really should pay attention to how much you're paying, because there are ways to cut that 25 to 30%. So in addition to the 24 they gave you, there's loans out there now that you can cut that interest rate off and you don't have to pay it because you can't deduct it. So why pay it?
No, that makes total sense to me. Hey, Kurt, just real quick before we let you go. During the nurtures today, I've been talking about the asset manager loan because I think it's just an outstanding tool, especially for small business owners. Can you give us just a little bit of a hint as to what that is?
Well, the asset manager basically allows you, it combines your checking account with your mortgage, and basically every dollar you put in your checking account, it's paying you the same rate as you're paying on the mortgage, thereby reducing your payoff. And because it's simple interest and not compound interest, you'll pay about 40% of what you normally pay in interest, and you own the home in about 14 years.
Wow.
And you're seeing a lot of people take advantage of it now, and this is the reason, because you can't write off your interest. Now's the perfect time for a loan like that.
So I'll tell you what, if you have even an inkling of entrepreneurial spirit within your soul, you've got to give Kurt Rogers a call today and ask him about the asset manager loan. And Kurt, how do people get a hold of you?
720-895-0500, or they can go to my website at aimortgage.net. We have plenty of information about the asset manager on the website. You can fill out an application. I can answer, show you how things work.
All right, cool. Hey, what you got going on Haystack tomorrow?
Actually, we're going to be talking about one of our favorite subjects of 17, which is healthcare, and how to start paying attention to make sure you're not overspending on your homeowner's insurance and your car insurance, because there are certain things you want to make sure you have the right coverage. So we're going to be talking to our specialist, Greg Lackey, on that one.
Oh, Greg Lackey, good guy. That'll be a good show, Kurt. Hey, man, thanks as always for checking in. We really appreciate you.